Good morning, students. Today we are going to know cost accounting introductory part. So let us see. So through this introduction, the learning outcomes are like this: types of accounting. How many types of accounting we know, uh, and limitations of financial accounting, meaning, definition, and the concepts we know through this video lesson. At the same time, objectives, differences between financial accounting and cost accounting, advantages as well as limitations we will learn through this video lesson. So here you see accounting has three branches that we learn in the first year. So first one is financial accounting, second one cost accounting, third one management accounting. These are the three branches mainly we discuss in this uh, topic. Next, so limitations. Due to limitations of financial accounting, we have uh, management accounting and cost accounting. So let us see what are the limitations of financial accounting. So one by one we will see. First one, historical in nature. So in financial accounting, historical data is recorded, because whatever the expenditure is done, whatever the incomes we received, so those transactions, those monetary transactions are recorded. So that's why what is happened in the past, those data will be recorded in financial accounting. That is the limitation of financial accounting. That means there is no future expectations. Okay, right. Next, shows only overall performance. Financial accounting shows overall organization performance will be shown, not the particular department wise and person wise, product wise, department wise, process wise. So like that we cannot see. So that is a limitation of financial accounting. No performance appraisal. So because here individual performance or department performance cannot be uh, calculated, so that's why there is no performance appraisal in this financial accounting. And no material control system. So because financial accounting only records monetary transactions, not in the aspect of cost aspects. So only monetary transactions are recorded. So that is financial aspects. No labor cost control. Low labor, regarding to financial accounting, material labor overheads cannot be determined. Only the expenditure, whatever the expenditure is done throughout the period, that is recorded in this financial accounting by using some principles. So that's why there is no material control, there is no labor control. So that is in financial accounting. Let us see next one. No proper classification of cost, because whatever the expenditure is done, that is recorded in the books of accounts. There is no classification. So that is also one limitation in financial accounting. No analysis on losses. So we can say whatever the loss is there, this much loss we have incurred in this year, that we can say. So during the last year we got this much loss, and we may say, so like that, there is no analysis of losses. So that is also one drawback in during this in the financial accounting. No cost comparison. Cost comparison means there is no cost comparison between product to product, department to department, firm to firm. So there is no comparison cost. So just to we record the expenditure, whatever the expenditure we have, that is recorded, that's all in financial accounting. So there is no cost to comparison in financial accounting aspect. So that is a drawback of financial accounting drawback. So next, sometimes useful data may not given to management to take decisions. So because management has to take decisions, so sometimes the proper information may not available from the may not sufficient, what we say, may not sufficient by using financial accounting. So that is also one drawback. So let us see next one. Next, meaning. So here we have to know cost meaning. So because the cost accounting itself indicating cost, so cost accounting studies cost aspect. So that's why we have to know the cost definition. We have to know the amount of expenditure, the amount of expenditure incurred on attributable to a given thing. It may be actual, it may be notional, whatever it is, but at the amount of expenditure is incurred to attributable to a given thing, that is a cost definition. So let us see in this series costing also we have to know. So costing, the technique and the process of ascertaining cost by CIMA, Chartered Institute of Management Accounting, management accountants. So techniques, what are the techniques and what is the process to know the cost? So that process is known as costing. So one more definition is given by Weldon. So like this, the classifying, recording and appropriating allocation of expenditure for the determination of cost, the relation of these costs to sales value and the ascertainment of profitability. This is a definition is given by Weldon. So whatever the definition we have, the process, whatever the process we are going to ascertain the cost, so that process is known as costing. Okay, next we will see cost accounting. So cost accounting, here you see cost accounting is the process of accounting for cost from the point at which expenditure is incurred or committed to the establishment of its ultimate relationship which cost centers and cost units by CIMA of UK, United Kingdoms. So here also the cost accounting process. Here what we say, cost center. So here we see cost center. Cost center is a expenditure allocatable center. It may be equipment, it may be department, it may be process, it may be machine, it may be a person. So like that we can see cost centers. So that can be allocatable. So whatever the expenditure we have, whatever the expenditure that can be assigned by some other persons or departments. So that is cost center. Cost units. So cost unit also we have to see. It may be the product. Some product may be produced. That product by incurring expenditure only the product may be produced. So that's why whatever the expenditure is to be allocated to cost centers and cost units. So that is a process. So whatever the cost we are ascertained, that process is to be allocated to cost centers and cost unit. That process, whatever the process we have, that process is known as cost accounting. So in the same way, let us see cost accountancy. The application of costing and cost accounting principles, methods and techniques to the science, art and practice of cost control and the ascertainment of profitability. So you see the application of costing and cost accounting principles. So here both the costing and cost accounting principles, both the methods or techniques, tools are to be adopted here. So this is to be recorded. This is a regular practice. This is a practice. So that's why by to get profit, this cost are to be calculated. So that's why this is the cost accountancy. This is the cost account. Next, let us see objectives of cost accounting. So the main objective of cost accounting is ascertainment of cost. Ascertainment means calculation of cost. So in financial accounting there is no methods to calculate what is the cost. So but here the main objective, the primary objective is to ascertain the cost, how much cost is incurred while producing the goods and services, while producing or making services. So that's why that is the main objective, because without knowing cost we can't determine the price. So that's why that is the main objective, to ascertain the cost. while producing the products. So next, analysis of cost. So let us see, in the cost we have three elements. One is material, labor and overheads. So these are the three elements. There will be some classification how much expenditure is incurred on material, on labor, on overheads. Based on that, so sometimes unwanted expenditure may be done, unwanted cost may be incurred, so that is to be eliminated in future. So that's why that is to be taken. So that's why the analysis is to be taken. So that's why in the elements point of view, in the production point of view, in the functions point of view, so the analysis of cost is required. Next one, control and reduction of cost. What is to be controlled? Cost is to be controlled, cost is to be minimized, cost is to be minimized. How do we minimize? Because then we have to know first what is the cost, what is the wanted cost, what is the unwanted cost. So what is the mandatory cost, which one is not non-mandatory cost, that we have to know. So that's why we can reduce unwanted cost. So that is the main objective here. So here by using tools and techniques, we have various methods. By using that tools and techniques, we can reduce the cost. Next, guide to business decisions. So business decisions are taken by the management, top level management, those who are people investment, those who are taking decisions. So that's why this cost accounting helps to take a decision. So that's why this is a cost accounting guide to the management to take decisions in a better manner. Next, determination of selling price. So earlier we discussed, so without knowing cost, how can we fix the price? How can we fix the price? So that's why without knowing cost, the price cannot be selling price. Selling determination of selling price can be known by knowing cost only. So that's why selling price can be fixed by knowing the cost. So that is the primary object that we calculated just now, we learned just now, that is ascertainment of cost. So last one, measuring and performance. What is to be measured here? Individual point of view, department point of view, product point of view, we can measure what is the cost, what is the productivity. So these are can be measured through this cost accounting. Performance can be evaluated through the cost accounting. So next slide, let us see the differences, because earlier we know what is a financial accounting. Right from intermediate we learn many things. We know what is financial accounting, but we don't know what is cost accounting. So that's why when we know the differences between financial accounting and cost accounting, it can be easy to understand what is financial accounting do and what cost accounting do. So that's why let us see the differences between financial accounting and cost accounting. So let us see on the objective basis. In financial accounting, the main purpose is to prepare profit and loss account, balance sheet for reporting to owners, shareholders and external users. So in financial accounting, we prepare final accounts, that is trading account, profit and loss account and balance sheet. So the balance sheet is prepared for to know financial position, and profit and loss account is prepared to know the profitability. So in financial accounting, we prepare these statements. These statements can be useful internal as well as external users. In cost accounting, the main purpose is to calculate cost information, detailed cost information to the management and internal users. So this is helpful to the cost accounting by studying this information. Let us see next, statutory requirements. This is obligation to prepare financial accounts as per the requirement of Companies Act and Income Tax Act. So according to the acts only we have to prepare, we have given proformas. Based on that only we have to prepare. So that's why this is a statutory obligation, statutory requirement. You have to prepare financial accounting statements at the end of the year. So whereas in cost accounting, it is also obligatory to prepare cost records as per the requirement of Companies Act. Whatever the records we required according to the Companies Act only. So in earlier case, in financial accounting, according to Income Tax Act, according to Companies Act, we have to prepare. But whereas in cost accounting, here we have to prepare only Companies Act, according to Companies Act only. So next one, analysis. Financial accounts reveals profit and loss of the business as a whole for a particular period. So overall business organization profit can be known through financial accounting. In cost accounting aspects, detailed cost information or profit information, product wise, process wise, department wise, so we can see in whatever it is. So that's why this is the difference between this analysis. Next we see financial accounts prepared periodically on annual basis. సంవత్సరానికి ఒకసారి ఇక్కడ ప్రిపేర్ చేస్తారు. సో here you see whereas in cost accounts it is prepared sometimes on daily basis, weekly basis, monthly basis, according to the requirement. Cost records can be prepared, so there is no particular requirement. So next you see historical data. So financial accounting records only historical data. So that's why whatever the expenditure is done, that is to be recorded in the books of accounts, that is in financial accounting. Whereas in cost accounting records prepared based on historical records and a predetermined cost. So in financial accounting, whatever is done in the past, that is recorded. But whereas in cost accounting, whatever is done in the past, that is recorded, as well as future expectations, that is predetermined cost, expectations, estimations, we can record, we have to record. Next, presenting format. Financial accounting information is shown in uniform format because you have to follow the acts, Companies Act and Income Tax Act. So that's why according to the act only we have to prepare financial accounts. So that's why we have given proformas. According to the proformas only we have to prepare in financial accounting. So whereas in cost accounting there is no proformas. So according to the requirement you have to prepare cost information. So next see cost type of transactions. Records only financial transactions like purchase, sales, receipts, payments, etc. So that means financial transactions only recorded in financial accounting. Okay, whereas in cost accounting, cost aspect transactions only recorded, issue of materials, store records, production aspects. So like that we record cost accounting. So next, types of statements. Financial accounting prepares general purpose statements to know profitability and financial position. We prepare where in financial accounting. In cost accounting prepares specific purpose statements to know loss of material, ideal time report, variance report, cost sheet, production. So like that we can prepare here. So these are the differences between financial accounting and cost accounting. So let us see advantages. Here reveals profitable and non-profitable or unprofitable activities. So in cost accounting we can categorize profitable, which activity is profitable, which activity is non-profitable, we can categorize through cost accounting methods. So next, ascertainment of cost. So earlier also we discussed ascertainment of cost is the main objective of cost accounting. So that's why through the cost accounting we can calculate the cost. Next, helps in cost control by tools and techniques. With the help of tools and techniques, here we say tools and technique means standard costing, marginal costing, BEP. So like that we have various tools and techniques. With the help of that tools and techniques we can control variance analysis. So like that we can know what is the it is useful to cost control. So helps in decision making. So cost accounting is very helpful in decision making, because the management the manage the the help of cost information the management can take decisions. So that's why it is helpful. Cost accounting information is helpful to the management, so that's why they can take better decisions. Next, helps in fixing selling prices. So earlier we discussed also, here without knowing the cost, how can we determine the price? So with the help of cost only the price can be determined. So let us take one example. If the cost of one product is 80 rupees, let us assume our profit is 20 rupees, then the price of the product will be 100 rupees. 100 rupees. So you see example, 100 rupees, 80 rupees is a 80 rupees is a product cost, and 20 rupees is a profit. Then selling price is 100 rupees. So that is so with the help of cost only we can determine the selling price. So that's why right. So that is a concept. Next, helps in inventory control. Inventory control is where while producing the products, the material should be under process. Material should be under process, before process, under process, after process. So like that we have various stages in producing goods. So that's why cost accounting helps in inventory control also. Helps in inventory control also. So that is also one advantage. Helps in reduction of cost control. Helps in reduction. How do we reduce? So let us take example for price issuing methods are there. Price issuing method means some according to the methods, first in first out, last in first out. So like that we have various methods. So regarding by using that methods, pricing methods, cost can be controlled in the aspect of material. Last one, reveals ideal capacity. Ideal capacity is nothing but how much timekeeping. Here timekeeping, when the worker is entered in the factory and when he is going outside. So when he is coming, when he is going outside, and during that time how much productivity is there, how much ideal time is there. So that is to be calculated with the help of this helpful principles. Okay, so these are the advantages. Next, limitations of cost accounting. So it is too expensive in installing cost methods. So that's why one of the limitations, because we have to establish separate cost centers, cost centers we have to establish, and we have to keep a separate people to look into the matters. So that's why it is very expensive. It is not suitable to the small production units. So that's why even big production units also sometimes may not afford. So that's why it is expensive in installing cost methods. Next, lack of uniformity in methods and procedures. So when we see in financial accounting, we have only a common format. According to the Companies Act, according to the Income Tax Act, we have to follow one simple format, whatever the organization, it may be big, it may be small. So only uniformity is there in financial accounting. But in cost accounting there is no uniformity, because firm to firm there may be change. So one type of firm may use one type of accounting system, the another firm may use one more system. So we see process cost accounting, contract cost accounting, batch costing, job costing. So like that, according to the requirement we may use. So that's why lack of uniformity. So different conditions, different methods. So that is a drawback. Next, cost analysis may vary in reality. So we may analyze cost. This much cost is incurred, this much cost is incurred. So like that we have analysis, but according to the reality, when we are coming to reality, the cost may be vary. So that's why that is also one drawback. Expensive for small production units. Just now we discussed it is too expensive because small production units may not interested to install this type of cost accounting methods. Next, market fluctuations not considered. Yes, here market fluctuations are not considered because whatever the expenditure we have, whatever the cost is this. So of course in some methods we may have to meet the market conditions, market fluctuations. In the some other conditions we don't have any such type of market fluctuations. So that is also we say drawback. So next one, all types of wastage may not be ascertained, like material, labor, overheads. So all types of wastages may not be ascertained. So sometimes may not be possible. Of course it is possible, I have to say, but in mild level we may not possible. Okay, analytical skills are required to understand all types of cost. So to understand cost analysis, analytical skills is required. The person who is the cost accountant is required analytical skills to understand all types of cost. Sometimes the cost may be variable. So in standard costing we may analyze material cost variance, so labor cost variance, overhead cost variance. So like that we can analyze. So according to the conditions the situation may be changed. So that's why all types of cost, to know all types of cost, the analytical skills is required. So in a person it may be possible, may not be possible. Next, management may not consider cost analysis while taking decisions. So whatever the information is provided by cost accountant, that information may be considered by top level management, sometimes may not be followed. So what is the use of cost accounting? So when the information is taken into consideration while taking decisions, that is better. So without taking consideration this cost analysis, what is the use of cost accounting? So that's why these are the limitations what we say. Next, thank you. With this we learn learning outcomes, introduction, concepts, costing, cost accounting. So definitions, differences, and objectives, advantages and disadvantages. So this is cost accounting introduction. In the next video lesson we will learn the continuation topic. So thank you very much.